Well, the Robotaxi event has come and gone, and like most things Tesla, it has everybody completely divided. I mean, it's either the greatest thing ever and nothing's going to top this, or it was a complete disaster and did absolutely nothing except show that Tesla's going nowhere. So let's kind of separate the truth from fiction with all this. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today. All right, so obviously my group members got kind of a full breakdown of all my thoughts on the event here, but I want to give you guys my thoughts too on this, but also take a look at what Wall Street is saying specifically and kind of point out the goods and the bads and kind of give you that perspective as well. And I'm going to give you one narrative that you cannot fall for, or it will absolutely destroy you as a Tesla investor. So let's jump into the video now.
All right, let's talk some Tesla. The stock's getting hit right now, but the stock was also pretty darn expensive coming into the report. Let's look at it from the credit side. Ishit Madlani joins us from S&P Global Ratings, Auto's managing director. Ishit, thanks for joining us this afternoon. Good to have you back on the show. When you look at the stock price, obviously Tesla's getting hammered, but that's in the equity world. Does anything change in your calculations on what this company is worth?
No, first of all, thanks for having me. Look, from our perspective, when we think about the fact that several companies have been pouring billions of dollars towards the vision of operating a fleet of autonomous vehicles for over a decade, this is not new. What the event did was it helped bring that vision to life. But from a rating standpoint, your question, the disclosures were not really sufficient to build any upside in our ratings model yet. Investments in self-driving from the credit world, are a drag on cash flows. And the only time when we think about upside is if we think there is visibility in terms of gaining widespread regulatory approval. We're not quite there yet. Luckily for Tesla, it's not a huge drag on ratings because they have enough liquidity and access to capital to fund these investments.
Now, the access to capital, I was kind of thinking the same thing because the show was pretty spectacular yesterday. They're on the Warner Bros. Lot and everything. They're not hesitating to spend right now to make a big deal of this. And some would argue that the robos, both the Android and the car, now the van too, that this is really the only way to justify their equity valuations. But to your point about, I guess, from the credit side, it's a little bit more like binary to some degree. Are they running or are they not? Like, are they pretty smoothly running still?
So we'll touch on that first in regards to him basically saying, hey, they have the liquidity to play this game. That's absolutely true. That's one of the best part. That is the differentiator between Tesla and every other automaker out there is when you look at the financials, I literally can lay out 5 different auto companies' financials to include Tesla's. And you don't need to know and take away the names off of everything. And even a person with no education whatsoever would go look at all that and go, oh, there's one company that's not a car company. That can't, those financials don't match the rest of them. They don't look similar at all. It's the outlier per se. That's Tesla. That's how different everything is. So the case of, in particular, this guy right here is obviously rating credit and other things of that nature, which is a little bit different than getting into stock valuations and stuff of that nature. So I don't want to go down that rabbit hole here. It's not really the right video for that because we talk about that for another hour. But in regards to their viewpoint of is Tesla diluting their value, kind of think about it kind of like a credit rating or something of that nature. The answer by spending all this money on autonomous itself, they're basically saying no because they have the liquidity to do it in the first place. They have the financial strength to do that in the first place. They have the margins to do that in the first place. So that puts Tesla in a very unique situation where they can absolutely, essentially, I'd say light money on fire, but they have that option to spend money on, kind of big things like this and nice presentations and not just beyond that, but continue to chase this tech because of the financial situation they're in. Other companies, and I'm not talking about way more into the rest, but other automakers specifically do not have the margins or the liquidity or the capital base to be able to do any of this sort of stuff. So that's why he's basically saying, and I think we all agree to a degree that, hey, there's really nothing that was shown that I could price in that we could say would improve their credit rating because we're not seeing anything tangible yet. However, the fact that they're spending money on this is not necessarily a deterrent to their rating as well because of the margins that they have, because of how strong they are financially. And that's why having that financial strength and looking at that financials is so important because it gives you that leadway to be able to do things like this. Think about examples like Meta, could burn, billions every single quarter on the metaverse And all it took was him just cutting back on some of that spending. And now all of a sudden, it was already spitting off cash flow to begin with. But now all of a sudden, their record cash flow is going the opposite direction there because the financials are so strong in the first place. Tesla, in terms of, in this particular world, that's why they can afford to do this.
Yeah. So what I'll say is, look, from the standpoint of the rating, we actually look at the fact that they're facing a lot of pricing pressure globally in the US.
Yeah.
The Model 3 has lost steam. The Model 3 volumes were down 40% so far this year. Shares down almost 7 percentage points. It's kind of expected, but they need to keep investing in R&D for the planned product roadmap that they've promised. So if I had to pick the most important rating factor, it's got to be the timing and success of its next generation, more affordable vehicle. They talked about it on the last earnings calls. They said it's on track for start of production sometime in the first half of next year. So from our standpoint, that's a very important consideration for market share and, of course, our view of its competitive advantage beyond 24 and 25. So from our standpoint, that's the next transformation chapter, the post the Model 3, Model 5 production overhaul. The next one will be the affordable vehicle, not the Robotaxi.
Okay.
Yep. That right there may be the most important thing. One, it's especially for a Wall Street guy. I understand he's a little bit different than hedge funds, but nonetheless, that is one of the most pretty layouts of what matters and why I tell you guys to ignore the noise all the time, both the bull and the bears. Because right now we have seen stagnation in the business for a variety of reasons. However, that next big market share jump, that big next profit driver for Tesla is that smaller model, that affordable model, whether it's Model 2, whatever the heck you want to call it there. They talked about it on the last earnings call. We didn't get anything on Autonomous Day. It was one of the rumors that was out there. Again, just rumors, so you take them for what they're worth. But nonetheless, we didn't get it there. So obviously that's going to be asked about on this earnings call that's coming up here. Actually, I have a preview coming for you guys this weekend where we'll get into the nitty gritty with all of that, exactly what needs to happen on earnings and all the other good stuff like that. But he's absolutely right. That is the next giant catalyst for Tesla that is tangible, that I can see right now. And more importantly, you can make some accurate projections on. Right now, Robotaxi is 3 years into the future, maybe even further than that. Obviously, if we're given Tesla timelines, it could be 5 years, 6 years, whatever the case is, into the future there. No way you can reasonably figure out what's going to be the market for it, how successful is it going to be, how profitable it's going to be. It's all speculation at this stage. And obviously, Optimus and obviously the Robovan itself are all years into the future, way beyond even Robotaxi at that stage. So those are all pure speculation. There's nothing there tangibly. So the next tangible thing that we have coming that I'm focused on personally, and that I know Wall Street is focused on, is that Model 2, which I think will be successful, but we've got to actually have the product. It has to be something that's desirable. And then, of course, they have to execute it as well and actually make it affordable. So he succinctly laid out not just a Wall Street narrative, but a long-term buy and hold investors narrative as well. I'm not into speculating. You did not invest in Apple speculating on what the heck was going to happen 10 years from now. You didn't invest in all. Now, of course, you're assuming they're a great company. They're going to do great things into the future. But you didn't overpay for Apple. You didn't pay $200 for Apple back in, 2010 because of what Apple may do in the future. You don't do things like that. Tesla seems to be the only stock where people think that that's okay to pay for something 10 years in advance. And that's just how you end up getting burned as an investor and how you end up stagnating for 10 years on a particular stock price. We've been stagnant for 4 years now because people took that approach, and we are not anywhere near those prices that we were at 4 years ago. So you got to kind of keep that in mind. When you start pricing in too much of the future, it gets you in trouble. So right now, that right there is the only tangible thing that I can point to based upon the presentation that we just received that gets me excited about Tesla stock over the next few years. Everything else beyond that is exciting from a opportunity standpoint, but it's all pure speculation, and I'm not about to pay for that now when it's not possible today.
And it seems like the past year in particular, the margin story, the pricing power that basically all autos lost, not just Tesla, because, their margins are still better than the legacy ones, even after all the pricing cuts, aren't they?
That's right. Yes. And yes, we did take down some of our pricing assumptions, which led to their margins declining. But if you compare it to the automaker average, on an average, the automaker EBITDA is roughly, for an investment grade company, it averages between 10 and 12%. By our forecast, Tesla is north of 13% in our forecast. So yes, even with these price cuts, as of now, it does have cushion as far as the rating is concerned.
Okay.
Yeah, I think we all knew that Tesla's margins are by far and away better than any other automaker there, and clearly into the well, I hate to call, I don't know what else to call it, green. It's just in a very, very nice, safe place, even with the margin erosion that's happened over the past year.
So those who are arguing that Elon's going to blow up his company by investing in these offerings right now, that's a little extreme. Fair enough. I mean, like the risk reward is still worth it if he can actually, get a major competitor to Waymo in major cities. I mean, it seems like that could be a huge source of revenue if it all works.
Yeah, I mean, any potential updates on how they're able to license this, work with partners, get more widespread regulatory approval, all of that is an upside. For now, these investments appear sustainable based on their cash. But again, from our standpoint, the next important ratings driver is really going to be the timing and the success of its affordable vehicle.
Okay,
Yeah, just make sure whenever you hear narratives like that, that's why that strong financials are so important, because it gives you the latitude to take those big shots, to bet on things that are futuristic that could drive huge revenue in the future there. That's the important piece there. So always keep that in mind. If it has poor financials and they're trying to take these sort of shots, that's a problem. But when you have great financials like Tesla does and the ability to create cash flow, it's not a problem at all to continue to work on these things, and it's absolutely worth their time. Even if ultimately they don't always work out, that's okay. Not every product Elon's going to touch is going to work out. I know there's a myth out there that everything he does goes to the moon and goes to gold. It's simply not true, guys. However, he has the ability, and that's part of the beauty of having great financials, is he doesn't have to hit on all of them. He just has to hit on some of them, and we're going to make a lot of money on shareholders. But more importantly, they have the ability to use that cash to try these things because of the financial strength of the company.
A bigger factor. Totally get that. Okay. So I'm also kind of thinking everything outside the box for a sec, just because I still got like the cyber van on my mind and all these things. One of the ideas is that, you and I go buy one of these cyber cabs and kind of run it like an Airbnb, basically. Do we know like how that would function for Tesla? Like, would they take a cut of anything? Would it just be a one-time sale and then they're out of the picture and then the consumer runs it on their own? What if the thing gets in a wreck? Are they going to be liable for fines? Do we know any of the potential kind of phase 2 of how it would work for Tesla?
Yeah, I mean, we don't specifically know it. Some of the disclosures around timing for monetization, what hurdles need to be cleared, even with the regulators state by state. Even in terms of technology, how many miles, before intervention, what's the benchmark versus others like Waymo? So look, my sense is that we need a little more details. As of now, if you think about the fact that automakers have been focused on this world for over a decade, so it's not the first time we are hearing this concept of a shared vehicle, but bringing it to life and making sure that the assumptions on the cost per mile are clear, and more details around the battery range. Without all that, it's very difficult to paint a realistic view as to what this would mean from on the ground monetization.
Yeah. So anytime you have new technology like this and something that's never been done before, it's answering all those questions is virtually impossible until we get closer to there and see what the laws are going to be, see how they're going to handle it, see how they're going to move liabilities. All those other things that's why I don't like projecting out so far, 10 years in the future. Nobody has any clue as to what any of that sort of stuff is going to cost. It could be a huge boon for Tesla. It could be something that puts a giant liability on Tesla and really, really cuts those margins down on something that should be a high margin product for them moving forward. There's all kinds of different things. It may turn into something to where legally, because of the way the liability lies, Tesla chooses to keep all the robotaxis only for Tesla only. You can't buy one and run it as a separate business. It's going to be a Tesla only business due to that liability piece. But we know none of that yet. Everybody's speculating as to how the law is going to be applied in different states. It may be different in each state, at least here in the US. If you know how the US works, we got all kinds of weird laws. It can be state, local. I mean, there could be a million different ways that this sort of thing can fall out, and a million different ways it has to be kind of sliced and diced in terms of the numbers there. So that's why speculating on this sort of stuff is absolutely useless. One, we're not there yet. We're not even close, according to Elon, according to this presentation. And two, how are all those other regulatory hoops, insurance hoops, and everything else involved in that all going to fall out? That's all going to take time for us to figure out.
All still up for grabs, basically. But for now, we've got the cash flow to dabble in the CapEx for this. The last part is it prohibitively expensive to do this right now, Nishit? Like, if they don't really take off, are they going to have to, is it going to strain their bottom line? To what degree is it straining?
Yeah, I mean, it depends. They haven't really disclosed the actual dollar amounts that's going specifically towards this initiative. But over time, if cash flows in the fundamental business, the market shares keep getting eroded. We don't have timeline or visibility on success of the affordable vehicle, and at the same time, money keeps getting poured into this. All those things coming together, that's when we would start getting worried about the cushion for its current credit rating. But as of now, I think over the next year or two, it looks as if they should be able to manage cash flow.
Thank you very much, Nishit. Appreciate the.
All right, so we'll go ahead and stop the video right there. He makes a great point there at the end. He didn't take the bait. The guy was trying to bait him. The host there was trying to bait him. He didn't take the bait. It doesn't. Yeah, Tesla has a couple years worth of runway before you even have to start worrying about the financials being in trouble. Now, eroding, of course, they've been eroding for more than a year, but we kind of knew that. Elon kind of said that last October on that earnings call that, hey, this was coming. This is exactly what's going to happen. It's going to take us at least a year to work through it. No surprises there in regards to that. And sometimes this is part of the ebb and flow of the business. Take a look at what happens over at Amazon, for example, especially with some of the high CapEx products that they go after and projects that they go for and such. You kind of see the same exact kind of cycle kind of go through. So I'm not concerned with that either in regards to Tesla. So my overall thought on the events were it's really cool. It's really neat. Nothing tangible there whatsoever. In regards to the investment itself. So the one narrative that you need to make sure that you don't fall for as a Tesla investor, I kind of alluded to it earlier, but there's a narrative that's out there. It's really almost exclusively to the Tesla community, Tesla investing community, not really anywhere else. Everybody has this perception that you need to be ahead. You need to be ahead of Wall Street. So you need to get on this, or you can't wait until the tech shows up in order for you to be part of this investment. And that is simply not true. That was the same exact mindset, the same exact thought process that got people destroyed in 2021 buying those highs, because you were trying to get ahead of all these things that were coming. Even if you knew and you didn't buy the hype that they were coming next year, but you actually knew that they were years into the future, you felt like you needed to get in years into the future in order to own the stock, in order to have a great average. And it simply was not true. Somebody out there paid $400 for, Robotaxi and for all these other great things that were out there in 2021 for Tesla that we absolutely know are coming, are going to get here at some point in time. And they are down on those shares 4 years later, despite the market absolutely booming. I got members that are up, their portfolios 4x'd during that time, 3x'd, up 80%. Across it, we actually probably have some members that are actually up more than that during that same exact time frame. So that is not a prudent investment to be that far ahead. Now, I agree with you. You don't have to wait until it's printing off billions of dollars on the back end in order to invest. You're right. That's late into the game. I wouldn't disagree there. But I can absolutely wait until there's something tangible on the table in order for me to move forward with that. Because if you go off of something that's so speculative and maybe it's 2030, maybe it's 2035, you're going to be stuck with dead money for a very, very long time. And all you need to do is pull up a return calculator and understand how far behind the curve you will be for everybody else who might very well own Tesla, but they were very prudent with their buys on Tesla and didn't price in and didn't pay for this thing that's coming, a decade away or so. It's a very, very different scenario there, and the math does not work out in your favor. You're right. So while I agree, I don't need to wait until it prints billions. You are absolutely wrong if you think you need to be 5 years ahead of that or 10 years ahead of that or whatever the case is. You just don't need to be that early to the party. You need to buy based upon the fundamentals that are in front of you at that particular point in time. And then at that stage, you'll have a great investment. And if Tesla does what we think it's going to do over the long term, you're going to be an incredibly happy shareholder instead of some of these other shareholders who do it the opposite way. And they're stuck with a bunch of shares in the $300 and the $400 range. And they're basically sitting, their portfolios are down the past 4 years instead of doubling or tripling or quadrupling or more during that same exact time frame, or even just being up 50%, 60% during that same exact time frame. So if you want to watch Tesla's earnings call in real time, you want to be able to talk to me about Tesla anytime you want on our live Q&As, make sure you check out the pinned comment. I may have left something special for those of you guys that made it this far in the video. Check it out, where you get 5 free courses, you get free coaching, you get to use the stock analyzer tool for free, you get to be a part of the best 6, 7, and 8-figure Discord out there. Put out tons of videos that never see the light of day here on YouTube or any other place. So make sure you check out the pinned comment, take advantage of what I left down there for you, and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.